This looks like I'm getting a little further, setting it up. Don't ask me what the difference was. This way it goes. And then I'm going to. We had a good number of signups, but particularly given the staffing. I'm gonna admit the speakers first.
Hello,
Hey, Jamil, thank you for being here.
happy to.
We are waiting for two more guest speakers, and then we'll get started, or at least once I get on Search Funder live, then we'll get started. Maybe that's what I should do.
Awesome. Lisa, nice to see you again.
Love,
Hello.
love.
Donnie,
Okay,
hello.
okay, we're at the point now where we have a ton of people in, so we're just gonna get started.
Hi, Jamil.
Hi there.
We're going to take off the waiting room. Welcome, everybody, to our session on the trends in the ETA space. This is our third annual doing it, and it's, I have to say, probably the most fun one that I do each year because it brings together so many awesome people, and we get such a big and global perspective. I'm going to do just a couple of announcements while folks are coming in. Leo is expected, although we should give him all kudos because it will be 6 a.m. his time as he's arriving in. And I have tried to be coherent at 6 a.m. with mixed results. So I know he'll probably do much better than me on that. So for those who do not know who I am Karen Spencer. I co-founded Search Funder. Most people know me from that. In recent years, I have launched Fetch Strategies. And what I do is I try to solve problems for searchers and business operators. And I do it through a multiple ways and a multi-layered approach. Right here are our upcoming sessions. I'll be sending the slides out, but I wanted to at least flag two things. Tomorrow we'll be talking about Pinnacle, which is an offshoot of EOS or Traction. So that's a great one for CEOs, and it's also a good one for searchers who are not familiar with the operations side of things. I think we'll be talking about how investors are getting more attuned into operation capability. So it's great to have a great understanding. And then we will also have 5 factors that underwriters use from a former underwriter. So that should be a fun session as well. We cover the whole life cycle for the searcher. I like to say we complement other initiatives out there. We try to be a safe and welcoming space for you to learn and grow and develop. We have for the early explorer, or if you've got a very specific question, we have Vault. If you have not taken a look at it, I encourage you to do so on the free trial. The most common refrain that I get from people who go into Vault is, "This is amazing." And it is amazing, and it's been quite a lot of effort and time to build, and I'm so very proud of it. Then we have the ETA Launch Hub. That's for aspiring and current searchers. So whether you're just getting started or have been searching for a while and looking for a jump start, we have the hub. And then we just launched last year our Challenge Point CEO Roundtable. That is for searchers who are at the closing point, and then operators of small to mid-sized businesses. And we look at your challenge points, hence the name, and we try to work on them in the coming 6 months to a year. We alternate between guest speakers and peer mentoring workshops. So it's a great group of people In fact, I enjoy spending time with all of our Hub Fellows and our Challenge Point CEOs. So let's go ahead and I will stop the share. And so in the interest of time, because I have more questions than I think we could get through, but I also want to leave time for audience questions. I'm going to be very, very brief in my welcomes of our panel. We have John Steinberg. He is an investor. He invests in the folks that invest in searchers, and a terrific supporter of the ecosystem, and a great advisor. If you ever get a few moments of his time, be sure to soak up every single word. We then have Lisa Forrest. And I don't like the word stalwart, but that is the one that is coming to mind. Lisa, you have just been there for the search fund ecosystem for probably as long, if not longer, as I have been, which is a decade, providing useful knowledge, making sure that people understand what they're getting into, and supporting them from the lender side of things. Then we have Vani Nataraja of Newton Equity Partners. And Vani hails from the United Kingdom. And Newton Equity Partners has been forming and looking and investing in searchers, and they have a global mandate. Then we have Jamil. And Jamil is a active searcher. I wanted to bring him on board to help verify what the rest of us who aren't searching are saying about what search is like, and feel free to contradict us. We have two others that we are expecting, and I will ask our guests while I double check to make sure that they can get into the Zoom. I will ask our guests to basically give a brief introduction of yourself. Maybe let's start with a brief introduction and tell me one thing you'd like to talk about today. So John, why don't you get started? We'll go in the order.
Sure.
And then Lisa.
Sure. So John Steinberg, been doing private equity investing for 40 years now. Came through Stanford Business School before search funds were called search funds, and certainly before it was even called ETA. So I'll represent the old man in the group. And left Stanford and got into tech, and from tech started doing venture investing, and did that for 3 decades, and ultimately decided that I didn't add value to the process. I didn't have an edge. I didn't understand it anymore. It had changed a lot. And went back to Stanford and went back to my professor, Irv Grossbeck, and said, "Hey, Irv, I'm certainly not done. Remind me of this search fund thing you started." That was 10 years ago. And that started me on a journey to Agate Hound Fund. And we are the only institutional fund of funds investing in the search fund space. So we invest in, without saying the names, the likes of the Anacappas and Pacific Lakes and Trilogies and WSCs and so forth and so on. Just to give you a perspective, we also have a mandate that we can invest up to 20% of the fund into direct deals, equity gaps, and so forth. So we do both. But we're on Fund 2, and we have something like 150 portfolio companies at this point.
Wow. And Lisa, and then Ronnie.
Hi, I'm Lisa Forrest, and I head up our self-funded search vertical at Live Oak Bank. And like John, I've been in this for a while, and this is I'm close to 40 years of banking, and largely that's all been SBA. I started in the SBA lending industry when lower middle market wasn't actually all that cool. now it's like really cool. Now we have our own asset class and all of that. So basically, to just keep it real simple, I mean, it's business acquisition. I mean, whether you call it a silver tsunami or not, or whether that really exists or not, I'm not really sure it really exists, the tsunami. I've been financing business acquisition for close to 40 years, and lower middle market privately held business owners have been needing to exit for all of those 40 years, and they're still going to need to exit over the next 40 years. And whether you call it something fancy or you get a little bit more simple about it, that's what I'm here to do. Here to finance the next generation of entrepreneur to acquire lower middle market, and my focus is SBA, Small Business Administration. And after all of these years of doing this, I really consider myself a coach and a mentor. And if I happen to help you finance a transaction, via my services, great. If I'm just coaching and mentoring you, and a different path is better for you, that's fantastic as well too. So I'm just here to support the ecosystem and the asset class, but basically just doing business acquisition in the lower middle market.
Okay. Thank you. Thank you, Lisa. Vani and then Jamil.
Thank you. I'm Vani. I am British with Sri Lankan DNA. So I've grown up kind of traveling the world with my diverse Sri Lankan family. I worked in business education for about 15 years, as well as working in leadership development for the likes of Mercer, for example. And then I worked more recently in an ed tech with leadership and data. So I love the human capital side of search funds. And my role, I'm a co-founder and a partner at Newton Equity Partners, as Karen said, and my role there is really search capital investment. So working with searchers, identifying their why, their leadership potential. Very similar to Lisa, really about equipping and upholding and nurturing the next generation of entrepreneurs as well, and of CEOs. So that's my role within Newton Equity Partners, is that part of the search fund process. I've always worked in very, very global environments. I've lived and worked in different continents. And so I love, in any one day, you can have a call with Germany, and then you can be talking to Chile, and then talking to China, or to Malaysia, or talking to India, Australia. I love the international nature of search funds, and I love learning. So every conversation is definitely packed with that, and definitely present company accepted in that too. So really happy to be here. Thanks for the invite, Karen.
Thank you for being here. Yes, and that's the part I love about this space too. I'm always learning and growing. Okay, Jamil, and then we have Mitch as well, who will be following you.
Cool. Thanks, everyone. I'm really happy to be here. My name is Jamil Adeniji. I'm currently a traditional searcher based between LA and Dallas. I discovered ETA in the search model while I was at HBS, where I graduated in 2017. And from the first time I heard about it, it was very compelling to me, but there were things about it that felt a little bit risky, and a little bit beyond myself, being 26 at the time. Since then, I've worked as an investment banker, I've worked as a management consultant, and I led the investment team at a BlackRock-backed IP fund. And what I realized through those 7, 8 years is just how important independence, the opportunity to lead, the opportunity to be on a team and really build something worth building is to me. And so I came back to search, having left my job in January, went back to HBS, talked to a bunch of professors, talked to searchers, and realized that it's the type of opportunity that I have to go after at this point in my career. Otherwise, I would not be happy with myself when looking back in 5 years. And I say that being able to look back 5 years ago when I had the opportunity initially, and feeling a little bit of regret that it took me so long to come back to it. So today I'd be happy to share perspective on being a mid-career searcher, I guess. And also the choice between self-funded and traditional. Everyone has their own interests and whatnot, but for me, they were both attractive and it was very difficult. And so if anyone is thinking about that, wants to talk about that, I'm very much happy to go over those topics or anything in general.
Okay, Mitch, then. Thank you.
Great, thanks, Karen. Hello, everybody. My name is Mitch Harris. I live in New York. My wife and 2 kids, originally from Detroit. I'm a former searcher, turned CEO and operator. Bought an email operations company in September of last year. My background is I've got over 20 years professional experience, primarily in sales and digital marketing and technology. I work for companies like Procter and Gamble, Facebook, Viacom. Most recently, I was a CMO a couple of times, and started searching in February of 2024. And the reasons why is, ultimately I wanted to have a little bit more control over kind of operational decision making and my future from that perspective. I wanted to kind of remove the cap as much as I could from a financial perspective on what my ability to earn. And then lastly, I wanted to create a more direct opportunity for me to drive deeper impact, not only on kind of family and kind of those immediately around me, but also my staff and community as well. And I felt like search was the right opportunity for me to go after that. So I searched for about 20 months from kind of start to close. Again, closed last September. My deal was about $6.3 million at a 3.7x EBITDA multiple. It's based here in the US. It's a remote-based business. And, other than all of the things that go into operating a business that I'm currently focused on, especially in my first 4 months here, it's just, it's a lot of grinding out work. Ideally, I'm focused also on aligning a few strategic partnerships to help drive growth here in the year.
Wonderful, thank you. So I'm going to add myself to the spotlight, even though I'm probably one of the very shy people. So I hate having to look at myself. So I'm going to try to avoid that if at all possible on the screen. So let's get started. I want us to go kind of macro and then drill down. So let's talk about the trends that are happening in the space. We've got, at least in the US, and it sounds like in Spain as well, with how they did with their banner year, we've got increasing number of searchers. We've got more capital coming in from VCs. We've got coming down market. We've got more customization of the models. We've got ever more conferences. And I know Lisa and John are road warriors on that front. So let's start with give me one trend that you're most excited about and one trend that you're most worried about. And I'm just going to go in the order on the screen right now. So it'll be John, then Lisa, Bonnie, then Jamil, and then Mitch. So John.
Great, thanks. I think I'm going to use the same trend, at least to start, to say I'm most excited and most worried about.
Well, that's the classic interview, right? Your greatest strength and weakness are the same thing.
That's right. So it's AI. It's I come from many years of a tech background, and I'm in fact still host founder dinners for tech founders in San Francisco every month. And AI is everywhere. And I just got back from CES, 100,000 people talking about AI. And what makes it so interesting and intriguing is I think the next 5 to 10 years is going to enable those who are open to it and savvy and comfortable with it to take a small business and apply the tool set and compete with their elderly competitors who are not going to do this and really potentially change the game on so many levels. On the other hand, it has absolutely decimated outreach, and every owner I know is feeling like they are the most interesting people in the room because they're getting calls every single day from people saying, "Oh, tell me about your business. I'm interested in buying your business. What do you do? Are you going to sell?" And so I think it depends how it's going to be applied, but it's going to be applied in all of these areas. And so we're going to have to think through on both sides of that. And the other piece of it is changing so fast. I have never, ever seen, and I've seen a lot of technology roll out. I've never seen anything like this. It is speeding up. And the vast majority of people do not appreciate, understand, or can even comprehend what is going to look like in even 2 years. So that's what I'm thinking a lot about. And I'm thinking, how can I add value to the asset class by bringing the tool set in and staying current on this and helping people.
Okay, AI, a positive and a negative. Lisa. And then
You know,
Bob.
John, on that AI, I've got a whole list. I've got like 80 things to talk about here. AI was certainly on my list as well. I just want to make one comment and then I'll pick some other things. But I'm not sure if I read this statistic correctly or if I'm butchering it up. But I think, you know, the stock market did very, very well in 2025. And the statistic I read is that a lot of it was driven by like 7 large companies that are doing billions of dollars worth of AI investment. And they're the companies that actually lifted up the entire stock market. So, you know, that's also sort of, so as that sort of wanes or maybe a little bit exuberance and the projects don't pan out maybe the way, and is that going to impact just the overall economic outlook? I don't know. And maybe I don't even have the stat right, but I thought that's what I read. So,
No,
right.
that's absolutely correct, Lisa.
Yeah.
And
So, I mean, it's astounding.
we've just never seen the ability to scale has never ever been like this. And I mean, if you talk to, and I don't want to get us off course, but if you talk to all the major pundits around what does 2026 look like, they would say it's going to be a very positive year because this trend continues. Who knows? But it sure feels like, well, for those of us who have lived through like dot-com bubbles and those sorts of things,
Yeah.
you just have to sit here and wonder a little bit. But one of the reasons I'm so interested in continuing to focus on small business is because to some degree, they're shielded from some of that macro kind of trend that we're talking about here. As I like to say, we're still going to need plumbers.
Right. So kind of what gave me a little pause in 25, you know, and I'm speaking kind of lower middle market, definitely sort of SBA land type transactions. You know, the defaults and the struggling portfolios of banks is definitely up. You know, I'm not sure how much I trust all the bifurcation of what struggled more than others in that portfolio. Are they smaller loans? Are they bigger loans? I think just overall, the increase in interest rates, especially if you were over levered in an SBA situation in 2022, 23, 24, the interest rate increases definitely took their toll. If you had structures that were only debt servicing with lower interest rates, and some companies just could not survive that. But overall, in 25, we talked a lot about struggling bank portfolios. I do think some of that's going to continue in 26 and 27, because generally, as an SBA loan is made, it takes a couple of years, maybe 2 to 3 years, for it to show up specifically in a default category, a statistic. But what happens is that before a formal default is registered, you have struggle. You have a lot of struggle, and that struggle is still not quantified anywhere. There's not a stat that says that anyone's keeping track of outside of each bank itself. There's not a struggle statistic. So we just know that more small business owners with an SBA loan struggled in 2025. So that's sort of the negative idea. A positive thing that I'm focusing on is for 2026 and a lot more of my conversations with my potential buyers, borrowers are, why is this interesting to you? If you think this is a get rich quick scheme, i.e. you're looking at back away from the social media, like you just need to like stop consuming social media. If you think this is something you're going to do, if you think this is something you're going to do for 2 years and you're going to make a gazillion dollars, this is in lower middle market. This is not what's happening. But if you want to truly be the next generation of entrepreneur, like Jamil and Mitch on this call, and you are interested in the people, the community, you are interested in meaningfully being a part of your community and growing a wonderful small business, and you're in it for the long haul, I think that there's still room for you to have a really good outcome. It just might be more people, be more quantified in the people impact versus you making dollars immediately. But our small business owners obviously make a really, really nice income from themselves, their families, their employees. For me, for 2026, I'm focusing a little bit more on my conversation around what's in it for you over the long term, and then making sure the SBA loan is structured appropriately and we're not maxing out leverage just because you can. But again, that's my more conservative conversation that I've always had over the decades. So I'm not sure if that's exactly what you were going for, Karen, but
Yeah,
that's what I was
it's
thinking about today.
exactly it. Yeah, that's
Okay.
why
Hey,
we bring you
Lisa,
together. Because
I'm
I actually
sorry.
don't, go
Can I
ahead.
interrupt just one second? I thought that was
Yeah,
so interesting. Can you just elaborate a little bit, given your tenure? You said that 22, 23, 24, you saw a little more default, a little more struggle. Um, is that in comparison to 10 years ago? I'm just curious, and what is it you attributed just to interest rates?
Not
Or
just,
okay,
not just, but that
that was my question.
certainly, that certainly didn't help, right? That didn't help. I think that because this idea of ETA is now called something versus, say, 20 years ago when I was doing this, it wasn't called ETA, it was like business acquisition. And I do think that the buyer profile was probably more mid-career or even mid to late career. So there was a really big part of my career where I was lending business acquisition dollars to a 50-year-old. Gosh forbid. But someone in their 50s that maybe had more personal financial statement to continue to feed the company if it was struggling. So I think the profile has just changed a little bit. I'm not saying it's any better or worse. I'm just saying that when you've got maybe more personal financial statement to contribute personally, if something's struggling in a small business, and I think that I do think the multiples were lower. I mean, that's just observationally. I can't draw the statistic. I do think multiples were a little lower 15 years ago. And I just think the buyer profile is a little different. And I think that the levels of leverage, personally for me, have gotten out of control. So your ability to, struggle through the ebbs and flows and the ups and downs of being a small business owner is, that's changed a little bit.
Karen, you're on mute.
that's so 2020 of me. Bonnie, go ahead and then Jamil.
Much to be excited about. I think, Brazil just celebrated 10 years officially of search funds. And then corresponding to that, Spectra, Brazilian investor, and Seralvo, a Mexican investor, published a really interesting LATAM study, actually,
Yeah.
about, what's happened in those last 10 years or so, or since the dawn of the first search fund in Chile. So really interesting to see that, exits are coming, the multiples are good, the success rate of searchers is pretty high and actually above the global average. A lot happening there, which gives me, a lot of excitement for Latin America, that the model is, despite having very different macro, factors compared to to North America and to Europe, they're doing really well, and the core principles of search funds, you can really see there, right? Like you can buy great businesses, resilient businesses, boring businesses, and do really well from them, despite, not having as much debt, having political instability, having currency fluctuations, you still do pretty well. And, in Europe, things are really exciting. Germany and Italy are just soaring at the moment. UK continues to grow. Spain is consolidating. You really start to see a professionalism in the searchers you talk to. People are really well prepared, well versed. You have great kind of ecosystem players there, good lenders who are making a name for themselves in the different economies. You've got good lawyers. I feel like things are really starting to professionalize, I suppose is the word that other search fund investors have used, and when describing 2025 in Europe and in some places in Latin America. I think places like the ecosystem builders. Sorry, you said what? I'm going to shut up. Maybe we'll talk
It's
about that
okay, go
later.
for it. I want to
Um,
see a conversation. So
One
go.
trend that concerns me is probably too many podcasts. I can't keep up. Like, how do you choose?
Yeah,
I would ask Mitch and Jamil just to shortlist me too, and then that would be my podcast. I just
great,
can't keep
great.
up with the podcasting.
Okay, I'm
Yeah.
gonna tell you, Vani, just join Vault and it helps short circuit that. I will show you afterwards if you want. It's great technology. So
Brilliant.
yeah, okay, yeah. Somebody asked me about that the other day, and I'm like, you just need to check out Vault. You can get the answers quickly. Like, do I really want to listen to this podcast or not? Yeah, yeah. Okay, Jamil, as a searcher, listening to this, does this put you in panic mode or thriving mode or both?
Not panic mode, but I think that for my own mental health, I rarely try to elevate myself to really bring those macro trends into my own decision making. But I do realize that the landscape is changing, and you've always needed an element of luck in search to find a great company. I think that gets a lot more challenging because you have more people pouring in to compete with you trying to find those companies. And so I guess I'll start with the concern is that there are just so many people coming in and wanting to do search and so many people touching CEOs and company owners that may not be in the best position to actually acquire and are almost muddying the waters in terms of both making certain people with certain types of companies think that their company may be a little bit better than it is, and also setting some valuation expectations that are a little bit not realistic because they're not actually positioned to close on a transaction. Um, I'm going to do a 1B, which
Okay.
is I think that in my understanding, the search fund model really works best when you find a great company. And that's getting harder and harder to do. A lot of people are finding good and decent companies, but I'm not sure that the investor expectations on returns are matching that change, which is why perhaps you're seeing the increase in leverage, because that's what it takes to meet the expectation of the returns when you don't have a great company to justify it. And so that's something that worries me, kind of. But I try to keep the blinders on and just focus on doing what I can do. In terms of what excites me or what trends excite me, it might be cliche to say, but I love the diversity of the people who are searching alongside me. I remember going to the Northwestern Conference in 2017, and it truly felt like a crypto conference. And now it's really nice to have a bunch of different people with different backgrounds pursuing search and using it as a way to get into leadership roles that they may not otherwise be available to them.
Okay, so Mitch, I have you on because I know that searching from when you started to towards the end really changed because it feels to me like everything accelerated. Mitch, why don't you go ahead and talk about the what you were seeing as a searcher and now what you see as an operator? Well, what are the things that excite you and concern you?
Yeah, I think as a lot of you have mentioned, right, like there's just been a continued acceleration in this space, right? More people searching for businesses. Also, I think sellers, I think became, even during my time searching over the 2 years, just became more and more aware of ETA, searching, and what this whole thing is in advance, where I think that just that didn't exist as much previously. And so that changes the dynamics of when you search because sellers are coming in, a lot of them with perceptions and preconceived notions of who you are, what they think you are. And that can, I think, at times work against you. And so that's just one other area to think about. And then just from the competitiveness standpoint, I think that's something that it just continued to accelerate, and I'm sure is still accelerating. I think for me, it is exciting to me what is happening in the space because just from a personal perspective, right? Like I'm passionate about this ETA thing because it's propelled my life in a significant way, and I think will continue to. And that's exciting for me. And I want other folks like me to also have the ability to do this, right, and understand the opportunities around it. And so for me, that's why I'm going to continue to communicate and evangelize this path. But on the flip side, I might be a searcher again, right? I might use M&A as a growth tool at some point here in the next few years. And so with that, extra competitiveness, that does give me a little bit of extra worry and pause around, how strong that growth lever might be for me if there's just, increased competition to go find additional small businesses to add to my portfolio. So those are the main things that I think I've seen And along with some of the other stuff that you guys have mentioned, AI, of course, that's kind of top of mind for me, just very direct impact to my business, both is just as you mentioned, John, a lot of pros. If we're able to capture it, it's great. It's going to propel us and accelerate us. But if we don't, it might crush us. So that's kind of the stuff that I've seen.
So we've talked about the lending landscape in the U.S. Bonnie, you kind of alluded to the market that outside the U.S. it is professionalizing a bit. One of the first things that happened in the U.S. was the Live Oak had its search fund lending center. Just having a name, having a place to go, really made a big difference. Are you starting to see that outside the U.S.?
I'm not sure what that is. What is the Live Oak Lending Center?
It's basically Lisa and Sarah and a whole lot of, I think, gremlins in the back that help support them. But without having a name, nobody knew where to go. Oh, my friend Bob bought a business and he kind of used this bank and maybe it might be good, but having, somebody who's actually has made a commitment to the ecosystem and was willing to help grow it and educate people really made a big difference in the US. I believe.
So what you're finding is what really accelerates, and I'm sure this makes complete sense, right? But what accelerates the ecosystem is having some kind of person who's really pushing a hub, right? Suddenly
Right.
things take off, events happen, investors are flying in, um, you know, like there's a lot of excitement, professors are doing things. But so like Search Panda, right? They're doing
Right.
such a good job of bringing people together, sharing information, bringing in outside people like, like the Johns of this world to come in and share their experience, talk about what best practice looks like in the US and other markets, and how you adapt and bring that to those markets. But then smart investors in places like Germany, Italy, are also saying, okay, but this is how we adapt to our market and to our nuances, and what is private equity doing in our country, and how do we compete with them, and what does lending look like, and what are best practices? How can that catch fire? So you don't across the European region, for example, I haven't seen lenders lending across markets yet. That could be happening. I'm just not aware of it. But you have these ecosystem people like Alex Kelm in the Netherlands, and that little hub is growing so quickly. It's phenomenal, right? And suddenly there are really good lawyers that you're talking to, and suddenly there's a ton of searchers emerging, and I think they are the catalysts that make such an impact. And then if there is a really good business opportunity there, then of course, the banks are coming and the consultants are coming and the accountants are there and the lawyers are there and people are really taking interest. So I remember a couple of years ago, I went to this, it was like this hilarious awards ceremony in London, right? Where Gerald Edelman came together and they said, right, we're going to host this thing and we're just going to give these crazy, wacky awards to people like best search fund, best self-funded searcher, best lender, whatever. But suddenly 200 people showed up in London 2 years ago. And I was like, how
Wow.
did that happen? Like amazing, so quickly, boom, the ecosystem grew so quickly because there are these hubs emerging, these ecosystem players that are just really bringing people together and thinking about how to build a community. And they're doing things in person. They're really trying to get FaceTime. They're just meeting up in bars. It's like an alumni bar of the week every month, right? So you kind of meet up and just have a beer and get to know people. Newton and I, my partner Newton and I, we went to Munich and we said, oh, Search Fund Hub, they're brilliant in Germany. And we said, hey guys, could you we'll sponsor a happy hour. Can you just ping it out to your members and see who comes? And we thought maybe 5 people will show up. 12 came. And we're like, wow, this is awesome.
Okay.
Just a chance to get to know people, talk to people, understand who you are, why you're there, and talk to each other and build relationships among each other. So I love that. I think that is just catching fire. Now they're doing it in Chile. And that ecosystem is growing so fast.
And
So
then that happens to me. I'll post something, not even really advertised or marketed or anything, and then suddenly I've got 50 people in Toronto.
yeah, amazing.
Yeah,
Yeah.
right. Let's move. We talked a bit about lending and a little bit about searching and sourcing. Unfortunately, just in the interest of time, I have to keep things moving. Let's talk about closing the deal. Now, we talked about seller expectations maybe getting higher in terms of the numbers, but it does feel like it's a little bit harder to get a deal to close than it used to be between the LOI and the close. It was hard enough. But I don't know if that's true or not. So I wanted to hear, let's start with John and then Lisa, hear from you. Like, what are you experiencing or seeing or hearing?
Yeah, well, Lisa's closer to it than I am for sure,
Yeah.
but I have, as I said, invested directly into searchers as well as talking to a lot of funds about it. And the Stanford study, which is still quite recent, points out that the numbers are down, right? From 70+% to getting, some people think it's getting closer to 50% on a traditional search.
Yeah,
Right.
I've heard even a little bit below.
Yeah, well, people have an agenda in citing these numbers, by the
Yes,
way. But yes, it's
yes.
definitely harder.
Yes.
And I think there's a lot of reasons for that. But what I'm always kind of surprised when I hear, and I hear it more and more, friends or colleagues say, I think I'm going to go buy a small business and I'm going to do it on the weekends or at night. And this is really a full-time job. And it's really hard. And I don't know the exact numbers. I'm sure some people on this call do, but it's in a traditional search, it's often that you put out 70 LOIs to get to 3 serious potential deals and maybe 1 in 3 close. And so it's just hard. And I think more people are getting smarter and people are getting lots more information. And I just think if you step back, and if I'm a seller, and I'd love to hear other people's reaction, if all of a sudden people are paying more attention to me, I start to think I'm better looking. Maybe I'm worth more. There seem to be a lot of people paying attention to me. And I wonder if there isn't a period here for the next couple years for this to kind of rationalize. I'd be curious how other people see that, but that's my experience.
Lisa, do you want to add on?
Yeah. I would say that the closing still feels, really reasonable. It's the getting the LOI signed and kind of to my point earlier about, is the structure a reasonable and a good structure? But let's say you're working with a lender, and I'll just come from the lender perspective here. If you're working with a good lender, on the SBA side, generally you're getting your loan closed in about 90 days, but it's that whole pre-LOI, spending time on the right deals, that to me seems that's where the rub's really coming into play. A lot more loan brokers out there, a lot more lenders, a lot more buyers, a lot more service providers. And I see where the sort of noise is maybe working on deals that probably really shouldn't even be worked on. But if you've got a reasonable deal and you get an LOI signed and you're working with a good kind of deal team, I think deals are getting closed. It's that pre-LOI to getting a good LOI signed that I think is where a lot of the I'm going to say wasted time's coming into play.
Okay, and then I saw both Jamil and Mitch and then Vaninad. If you want to just kind of popcorn any thoughts or additions, feel free to unmute and add on if you'd like.
Yeah, I mean, I can only speak for my personal experience, which is very limited, right? I don't have the view that Lisa and John have from all the businesses on closing. I closed it was a 7-month from LOI to close. Originally planning on 3 to 4 months, and we were kind of on track. There was a little bit of, maybe a week or so delay due to let's call it gathering up investors and getting them in the right place. Maybe another week or so on my part, and some seller stuff. But there was a lot of I think this might be specific to last year, but because of a lot of the changes with the SBA program, it seemed like everyone needed to get up to speed. there was a lot of learning and education that needed to happen. That was on all parties, right? Myself, the seller, investors, and educating them, and the lenders as well. I think even the lender that I ended up going with, even internally, it seemed like there needed to be a lot of education that needed to happen on the fly. And I think because of all of that, that was one of the reasons that my deal got delayed. And I've heard similar stories from others. My hope is that a lot of that's dissipated into this year. And but you never know what can happen, and if there are more changes that happen to programs like these, I can see that causing additional kind of strain in deal time.
And that's interesting because that reminds me of the before times, well before the pandemic, before there were search fund lending centers. The job of the searcher was really to educate everybody in the chain in order to get the deal closed. So you're going to a bank who'd never heard of a search fund, didn't realize you actually wanted to move to Minneapolis. And trying to explain to them what a search fund is and that you were a serious buyer. So very, very interesting about how just having folks who have the knowledge, and here everybody was learning about the new SBA rules and then the revised SBA rules, if I remember correctly. So it really can put a damper on things. Would either of you, Jamil or Vonnie, like to add on, or shall I move to the next question? Okay, so I'm just sort of going through the kind of the phases. We talked about AI and operating the business, and certainly that is a concern on both the positive and the negative side for somebody who's acquiring a business. One thing that I've been hearing a lot is folks wanting searchers to have more operational skill or more understanding of what it's like to actually operate the business that they're buying. Do you think that that means that we're going to see more mid-career searchers get funded for traditional search, or perhaps get funded through SBA loans? You think there's going to be a preference for that? Any thoughts about that at all? And I'm just going to popcorn it. You can throw it out there. Yeah, go ahead, Bonnie.
Certainly the case in France. So they've had a bit of a rocky few years in France with search fund investments. I can see John nodding, and things haven't gone so well. Many search funds haven't found companies at all, and so some of the private equity investors, in particular, are certainly having a preference for older operator kind of backgrounds that they invest in. One thing that I'm watching in particular is it's a kind of an accelerator, not an accelerator, called Cassius Search. And this is where a guy called Stanislas is picking his own, like maybe 2 or 4 searchers a year and working alongside them, and choosing people who have quite experienced operator background. And he's really the M&A expert. He's a family office as well. So really great experience that he brings. And that combination is very compelling. I mean, they raise very quickly, for example, and they're oversubscribed already. So that model for France might work quite well for the next few years. However, other markets, you can still, like Portugal, Spain, still Italy, you can still have the younger profile searchers. London, I think, has a preference for more experience as well. So let's see. But it's really interesting to see how it's worked in the US and kind of how it's going to pan out in different markets. But you're seeing very nuanced profiles according to the market and the challenges of the market.
Right. And I've heard often that culturally it might be harder for somebody in some countries in Europe to sell to a young person. Like here in the US, we have sort of a fascination with youth and energy, and being able to pass something on to the next generation was an easier story to tell. I don't know if it's as easy yet.
What about Japan, Karen? We
Right.
had one of our searchers acquired in Japan, and we were like, how's he going to do this? And he was brilliant, but he had some really great gray-haired local investors who flanked him in every meeting, went to all the companies with him, and he acquired. But talk about challenging. That was a great challenge. Yep.
Yeah. Lisa, I saw that you unmuted.
Yeah, I would just say from our lender perspective, we are definitely looking for a little more business experience. Especially in the SBA category, and I think just business acquisition in general, finding direct industry experience, that's really going to be a really, really high hurdle. There are certain industries where we definitely want industry experience, but from a generalist perspective, sort of industry agnostic, we're definitely looking for more um, operational experience, more business experience, more work experience. And we're also looking for more personal financial statement to support not only the down payment, but this post-closing, um, ability to, bring in more equity if things are kind of on a bumpy road. And, there's the J curve, there's transitional ups and downs. So we're looking for more resume and we're looking for more personal financial statement. Not that investors can't come in and be part of that cap table and that cap stack. Absolutely they can, but we are looking for more buyer strength.
And I'm going to have Jamil comment. I just want to let folks know if you have a question that you would like to ask our august and esteemed panel, please put it in the chat or raise your hand. I could ask questions all day. I feel really privileged and proud to be able to have gathered them together today. So Jamil, sounds like you might want to add on to Lisa.
I do, and I'm not sure how I want to say this, but I feel like some of that is a changing of, especially and particularly for traditional search fund, of what the value proposition was. It was that investors who have the experience are willing to support young, inexperienced future executives on this endeavor. And what has happened, and what I've heard has happened is that there's been a massive influx of searchers and not enough investors that are experienced that can support them with that experience. And so they're pushing the responsibility of having operating experience onto the searchers, which I don't know if it's good or bad, but as someone who would have wanted this opportunity out of MBA, it's kind of it's negative to me. And it makes it and it gets into this thing where search starts to look more and more and more and more like pure private equity, in the sense that if what you're looking for is an operating executive and you bring the money and they've already got the chops, then what is the difference in terms of how the business is being operated? And so for me, it was really important as I was going out to find investors, finding people who have been searchers before in the past, and being really upfront about the fact that I'm mid-career and I have more experience, but I don't have the operating experience. So no one is surprised at the point where I'm looking for mentorship when hopefully I do acquire a company. But I will say that that's something that's really important if you're thinking about going traditional, is being fully aware of the fact that it's very easy to get fired as the CEO after going through the entire process. And so just keeping that in mind when you're choosing between the different options. I guess the SBA can also fire you if you go that path as well.
Well, and Jamil, that's a great point. I'm going to make a distinction on the SBA path because you're on your own. You're personally guaranteeing something, and you might have investors in your cap table, but it's a totally, it's a completely different strategy, traditional versus self-funded, where you're the person running this, and so even though the SBA is there to guarantee part of your loan, it is still a loss to anyone that goes in a default. You're still potentially going to lose your home. The bank loses because the SBA is only guaranteeing a part of that loan. So SBA, I think from a PFS and a resume perspective, we're looking at it a little differently than maybe that a traditional path, to your point, Jamil.
And Jamil, I was at the Stanford CEO conference, and a lot of energy was spent during one of the sessions there talking about the need for greater mentorship on the traditional search side. The first cohorts that got mentored by astounding people who were just absolutely terrific at it. And they talked about Irv Grousbeck, sitting down every single week with them and helping them be a better business owner. And as the ecosystem has grown, those opportunities have gotten less and less. In some ways, that's why I have the hub, is to be able to provide that mentorship in addition to other support that searchers are able to garner. But it is definitely recognized, and I think for searchers, it would behoove them to make sure that they have their support network. And in fact, on that vein, I will be sending out slides after this. I'll also send out a link to Lisa's session that she did on changes in debt last December. And then I'll also send out a link about how to structure your support network. It's based on Jan Simon's book. All I did was add my flair to it and make it a little bit more templatized. Yeah. Yeah. So I don't see questions in the chat just yet, unless I'm looking in the wrong spot, which can happen. But I do have one final question for each of us. If you could give an aspiring searcher one piece of advice today for 2026, what would it be? Everybody thinking. You are, when you have it in your head, feel free to unmute and say what it is.
Just from my observation, because I work with buyers looking, again, speaking from an SBA standpoint, looking for, SBA type debt. I'm just going to say patience. And I know that's so hard to say. I'm a service provider. I'm not the one that is going to be, acquiring the company and operating it. But patience is my kind of word for, and discernment. Patience and discernment are my two words for 2026 when it comes to this whole endeavor. And I know it can get lonely and it can just get fatiguing out there, but if you are looking to acquire, it's got to be the right one. It's got to be the right one for you from a culture perspective and a numbers perspective. So just bring in as much patience as you can in order to make sure you're signing the LOI on the right deal.
I guess I would say, oh, Jamil, not to cut you off.
Please.
I would just say that you've heard in this conversation more than once, there are more searchers out there, more people talking to sellers. I think really being clear about your own personal brand so that you can stand out and be very clear about what you bring to the transaction beyond money is really going to be increasingly important.
I'll build, and I think related, what I would say is that I think the ability to be resilient, because it's a challenging environment, and it's challenging anyway, right? And it's getting more and more challenging for a lot of the reasons we discussed today. I think as a searcher, you have to demonstrate resiliency, and you have to do that consistency over a long period of time. You have to just be ready to, you're going to get told no. You're going to find lots of stuff that's not going to work, and it's not going to feel good a lot of the time. And recognizing that search is a very binary experience where, there's 99 no's and things aren't going to go right 99 times, but until that one thing happens at the end. So I would just tell everybody to keep your head down, keep getting back up when you get knocked down, and something will turn up.
I'll just build on that quickly and what Lisa said in terms of the patience and the resilience is just to take care of yourself while you're getting the process. I had the idea, I'm in my 7th month, and I had the idea when I started that I'll just put my life on hold and focus on this and really go hard on this. But just given how much is out of your control and given how much resilience you need to make sure that you're showing up the best that you can every day. And what that means is taking care of your physical health, your mental health, all your relationships outside, making sure you have community of people to talk to, maybe buy a dog because you spend a lot of days by yourself getting bad feedback and really having to be resilient. And no one can do that without an outlet and without really being in the best shape holistically that they can be.
I have a few, but I'm trying to pick one. I'd say, and this is something that we've built into our search capital investment process, but it's know when to walk away. Time and budget are so key, and I've seen searchers run out of both really badly. And so just knowing oh my gosh, okay, the majority of my investors really don't like this deal. I'm not going to spend ages selling it and going deeper into diligence and blah, blah, blah. Just walk away. Know when to walk away. And we're really testing that with searchers as as we do our selection process at the moment.
So my advice is very short because all of you said, and particularly Jamil said what I wanted to say. I would say my advice is listen to our panel. I know, John, that you have to step away now. I want to thank you and thank everyone for being here and participating. I will stay on to answer additional questions to continue the conversation, but I know that you all have busy lives. So feel free to depart whenever you need to. Lisa, I don't know if you saw the question in the chat. It's on the default rates. So if you have like a spare moment to add on to that, that would be wonderful. But I'm going to give our panelists just a huge round of applause for me for this excellent discussion. We will be making this as available as we can because it's so important for everybody to see the different elements of the beast from different perspectives as we head into the new year.
Karen, thank you. I do have to go, but I actually am so happy that amongst the six of us, I am the only white male. That is great. And it is one of the reasons I love this asset class and I love the community and I believe in it so much. So thank you for doing what you're doing and everybody on this call.
Thank you, John.
Hey, John.
Thanks,
I
Karen.
I gotta run as
Yeah.
well, but if
Okay,
anyone has
thank you, Jamil.
questions, please feel free to reach out to me on LinkedIn. If you have a deal for me, please feel free to reach out to me on LinkedIn. Karen, thanks for putting this together, and hopefully I'll see all of you again sometime.
Bye, Jamil.
Bye.
Thanks, everyone. Good night from London.
Good night. I hope to see you soon.
Good night, everybody.
Thank you.
Bye.
Thanks. Okay.
Well, Karen, I can answer this question for a couple minutes if the
Okay,
person's
great.
even
And
still
then,
on. So
yeah, Adrian
Hey,
is
Lisa,
still
good to see
here.
you.
hi, Adrian. Good. You know, I don't think there's any one idea, but I could at least just give you kind of the top kind of 3 or 4 things
Yeah.
that we look